Good morning, everyone. This is Ryan Endner with your Wednesday, February 19th morning comments. We did get a headline from China yesterday after the long weekend. Trade was possibly looking for something a little bit larger, but it was a step in the right direction. We got the headline, China to grant tariff exemptions on 696 U.S. goods. This did come as soon as the phase one trade deal was put into action here after the last 3-day weekend. Again, let's quick and flip over to the May bean chart. We see that the May beans had been buying up over the last 2 weeks, possibly looking for a little bit larger of a headline than that. So we are setting back here last night. We'll see if this headline is enough to keep the market moving sideways, or if the market treats this as a little bit overly disappointing and starts correcting back to recent lows. So we'll want to track the May beans because they are the lead contract now and the chart we should be watching. Let's flip over to the commitment to traders report from Friday. We see funds adding a moderate position of corn, 16,000. A little bit light position added to the beans, about 10,000 here. And we see their new net position as being still just a light short corn position and a moderate bean position. So in grains, they are selling, but they don't appear to be doing anything in too large of a hurry here. They don't hold massive short positions in these markets. While we're also looking at this, let's take a look at cattle. Funds sold 18,300 cattle, maybe a little bit more than would have been expected, bringing their long position down to just around 37,000 now. On previous liquidations, when funds have sold large positions out of cattle, the part where you call them flat might be 10 to 15,000 longs. Last year, they honestly didn't stop selling until they built a record short of 6,800 shorts. So you don't exactly know what level they are going to stop selling, but we do see at 37,000 longs, you would imagine it could be at least close. Let's also flip over to the snow map. This is the 8-day snow outlook for cattle areas. We see that there has been snow in the forecast late last week and yesterday, but this morning's map removed a lot of it, keeping most of the snow here only in the mountains. So it's hard to tell if some of the support from Friday or yesterday was snow related, but we're going to find out likely quickly this morning. If there is a setback in cattle due to the snow leaving the map, we'll know that that was part of our support here. Looking at the cattle fundamentals for this week, the show list was down 6,900. Last week's average cash trade, $2 lower at 119. We do want to mention with a 6,900 lower show list, we would normally expect about a $1 higher cash trade and see that reaction in the futures. However, we do want to point out that last week, cash traded $2 lower, while the futures were 57 cents higher. So we may have a higher cash trade already priced into the futures this week from Friday's trade. So as always, we'll see what we get for starting bids and see how the futures react from there.